Hello and welcome to a new video where we're talking about technical indicators. Now, without being dramatic, this is literally one of the most important videos that I can make because I know what's happening. One of the biggest blocks that is stopping traders from earning consistently in the markets is this confusion between technical analysis and trading, and not understanding that these things are different. And if you're here watching this video, I'd really encourage you to stick with this. Let me get through all of these points, because there's a very good chance that if you're here, at some level, you've developed some technical analysis skill that's not useless, and this can be used, but you've never put together how to take that information, how to take your technical analysis, and what to do with that information, and how to trade with it. So in this video, I just want to break some of these things down. We're going to be specifically focusing on technical indicators. I want to walk you through their use cases, ways we shouldn't be using them, and then I'll give you my thoughts about them. But towards the end, I want to explain a couple situations where you are using indicators that are just messing you up in live trades. And I want to walk through why it's happening and then how you're going to fix this and a way to move past it. So it'll be really important. It'll be a great video. Let's just jump into it. Starting off just talking about technical indicators. Now, if you pull up your charting package and you look at the indicator library, you look at the studies, somewhere there will be a long list of indicators that you have access to. And what these indicators are designed to do, there's quite a variety that you have available, even though a lot of these on the list are designed to do similar things, maybe to do something along with following a trend or understanding when something's oversold or overbought. But even though a lot of indicators are designed to do something similar, there's still a very big variety. And if you're not careful, it's overwhelming because there's a lot of combinations, a lot of things that you can do, and even understanding what they all are and why we would use these things can be a little bit much. But either way, there's a lot of indicators that we have available to us, a lot of information. Now, as we're going through this, you can know from me that I do not use any indicators. And when you see things on my chart, and if it ever looks noisy, then a lot of what's on there are just actual lines and information that I've drawn on there myself. And then if I'm using cumulative delta or if I'm using the volume profile, these are not indicators. These tools are very different. And the information that I'm getting from these real-time market-generated information tools are different than the information I would be getting if I'm looking at an RSI or something like that, okay? So we can keep that straight, but the good thing and what you would use indicators for, their use case, they're very good at adding in and supporting your trade ideas. So if you have a trade idea that is shaping up and you're ready to get in, you can use an indicator to help really refine that entry and make it better. Or if you're in a position, it can really help you with managing that and understanding if something has changed. So maybe you're in a trade and you're using some type of a moving average to where as that trade is working out and it's going up, as long as it stays on top of this moving average, everything's fine. And if it starts breaking down that moving average, you know something has changed and you need to take that trade off. These are very viable things. What technical indicators can also do is help with some of the context of what's happening, where maybe not even to help you get in on a trade, but maybe the market is just like tanking and you kind of have that urge to just fade it and think like, oh, this has got to be over, so let me get in and go the opposite way. You're feeling contrarian. A technical indicator might give you some cues that says, listen, this market is dropping and it is looking very weak. There is no signs of strength here. And that kind of added information will help you not get into something you shouldn't be involved with. What we do as traders, the majority of it is just managing the downside anyway. So this can be a very beneficial way to use an indicator, to kind of put that on your chart and to help with some of the context and some of the information, okay? Technical indicators, they have their use cases, and there's ways that we can be using them. Some of them I just explained. Now, what indicators do not do well, and where you're going to be falling short if you are using an indicator and if you're trying to make it the star of the show. Something important to keep in mind about indicators. They work very nice as like support staff. They work very poorly if you're trying to make them the star of the show. And understand this is one thing that'll separate a struggling trader from a pro. A struggling trader has no idea how to create a trade idea, no idea how to look at the market, put together what is going on, and to come up with a quality trade idea. They're 100% relying on an indicator to give them the idea, to tell them when to enter, to tell them when to exit. And if that's what you're doing, if you're coming in every day, you're pulling up a series of indicators and you're leaning on them that heavily and you're expecting that much out of them, you're going to have a frustrating experience because you're putting way too much. And that indicator combo you're using is going to crack under the weight of that load because you're asking more out of it than what's reasonable. And at a lot of levels, you should understand this, that the market is too efficient to let something like that exist, where all you have to do is just follow this thing, click this button, click that button, and make a lot of money. If something like that existed, it would not exist long. And if it could exist in the markets, then literally everybody would be filthy rich. And so that's a very good insight into what a struggling trader is doing, just very focused in on that. A pro trader and somebody who's getting on in this is going to be able to look at the market and come up with and put together a trade idea. And then at that point, potentially use indicators to help support that idea or to help refine it and to help make it better. And you can let that sink in a little bit because those two different dynamics, they might seem subtle, but they're very, very different. And so using technical indicators as kind of a star of the show is very bad, but they work very nice as support staff in a lot of cases. Now, taking just this conversation a little bit deeper about technical indicators, one thing I would like to point out is that they are not necessary. You do not have to have technical indicators on your chart. I don't use them. I don't promote them. And if you're using them for whatever reason, that's fine. And I'm not so against them that I think nobody should use them. But it is, I think, maybe a good perspective just to hear that you do not have to use technical indicators. It's very well not to use them. But if you are using them, nothing's wrong with that. That's fine. And there's some very good ways that you can use them. But let me speak into a little bit about this when you're using technical indicators, okay? Something to keep in mind is let's keep things extremely simple. What'll end up happening if you're not careful is there's this bias that we all have. But if something has more bells and whistles and if something has more information, we like to think that it somehow is superior and that it's better. But this is not what happens in trading. At the end of the day, when you get into a position, it's either going up or it's going down. It might be range bound, but it's still going to be going up or going down. And we want to keep things very simple. And to come in here and to put in a lot of inputs, you're complicating the process. So when you're using indicators, you always want to just come back to what we're doing here, what the market is doing here, and don't get caught up in a lot of activities just based on what indicators are telling you to do. Keep it simple, zoom out a little bit, and don't get too caught up in what the information is maybe spitting out. And really, you just want to keep as few inputs as possible. And every indicator that you have, every extra piece of information you have, it's putting in more inputs. You are not better off and you are not more well informed. But this is the trap we fall into of thinking that, well, this more information is going to be better because now you're going to be able to see more and now you're going to be able to be more informed on your trades. Go out there and try that. But I can tell you, you're not going to find success with it because that line of thinking does not track right in trading. And more information and putting on more inputs is not going to help you trade better. So you're going to want to keep it just extremely simple. And one of the best things that you can do right now with your indicators is look and just scan through your charts. And if there is any indicators that you do not actively use, remove them. This is what happens. Please follow. When we're starting off in trading, it's very easy to just want to explore indicators, and you should be doing this and make some explorations, come up with some of your own thoughts about stuff. And if you're trying out indicators, putting them on your chart, kind of seeing what they do, it's very easy to like them and to have a series of indicators that you just kind of like. And that's fine at some level. But what happens is because you like them and you kind of understand what they're doing, you leave them on your chart. And when it comes down to what you're focused on and what you're actively doing, most traders have indicators on their chart that they're not really using. It does not help them make a trade decision, but it's just kind of sitting on their chart. Here's why you have to stop doing this. When you are trading and you're doing your analysis, you are in a very different frame of mind than when you're in a live trade. We all have different levels of awareness, and the level of awareness you are in when you're doing your analysis is very different than the level of awareness when there's a live trade on. And something important for you to get right is when you place a trade, there's a different part of your brain that gets engaged. And our brains are these incredible things, but they really don't understand context. And your brain, when you enter a live trade, flips on this survival fight or flight part. And it doesn't necessarily know that you're in a climate-controlled room and everything's okay. It doesn't necessarily know that you're not out in the woods being chased by something. It just knows that you have a threat, that there is some type of danger. Now, when that part of your brain is engaged, things change. One of the things that's going to change is your focus. You're going to get real focused in on certain things. And again, this is part of like your survival instinct. We need this, but it does not help you in trading. So what'll happen? You're doing your analysis, you've got indicators that you're not really paying attention to, and then there are some information that you used to make your trade decision. Now you're in this trade decision, the information you're using is telling you one thing, but then all of a sudden you put your focus on this indicator that you've never really looked at in weeks, but it's doing something opposite. You start freaking out and micromanaging the trade. This will happen. Because what's going on once you're in a live trade is very subconscious. A lot of subconscious activities are going on when you're live trading. This is why you can do the dumbest stuff in a live trade, and then as soon as you're out of the trade, you can sit back and just say like, why in the world did I do that? You are not the same person in that trade that you are when you're out of the trade, as far as like the level of awareness that you have. Very important to get this right, because when you have extra indicators just hanging around on your charts, what's going to happen is you are not going to be able to trade well. You're going to micromanage your position. You're going to start seeing things that don't matter, but you're going to put a lot of importance on them, and they're going to cause you to make trading errors. This will happen, and there's no way around it, because when you're trading live, subconscious things are at work here that you can't necessarily control. They're just going to happen, all right? So one of the best things that you can do for your trading is go through your charts and keep them clean. Anything that you do not use actively to make your trade decisions and to perform your analysis, get rid of it. If you like it, maybe put it on a different chart that you don't have to look at all day, but keep everything, just trim everything down to what exactly do I need to make a trade decision. And a good rule of thumb, and the best thing I can say about using indicators, use as many as you need, but as few as you have to. That's the best way I think I've ever heard it said. As many as you need, whatever you need to make a trade decision, use it, but as few as you have to. And if you don't need it, get it off, don't use it, okay? And this is what happened with me when I boiled this down to as many as I needed and as few as I have to. I didn't need them. They didn't play a role in what I do, so I've taken them off and I don't use them, all right? But the key parts of this video, if I can kind of recap them, is really understanding the use cases of indicators. And if you are coming in and you are putting too much importance on them and expecting too much out of them, it's not going to work out very well. And one of the biggest issues that I have with indicators is it really spreads this like virus that has infected the online retail trading community. That people are coming in and they're very confused about what we're doing here. And there's a lot of time and there's a lot of energy and effort put into studying and trying to master technical analysis and jumping around from different indicator combinations to different indicator combinations, but never being able to earn consistently with that. Because you can spend, and I've talked with traders that are 5-10 years into doing this, and I can tell by talking with them that they have built up a lot of technical analysis skill, but they, in all the years they've been doing this, they have never learned how to trade. And please just understand that the ability that you have to push a button because this line crosses this line, that is not the skill that is going to make you money consistently. And what we have to do here is to be able to separate this out. If we're using indicators, that's great. Use them in the right way. Use them to support, use them for some contextual pieces, use as few as we have to, but as many as we need, and then focus on and put a lot of our attention on the skills that we need to become a trader and to become better at that. Okay, so I hope you've enjoyed this video, and if the idea of what we're talking about here just strike something with you and you want to hear more content about this, make sure you subscribe to the channel. I actively put out content that you can be a part of and you can interact with. So you can subscribe to the channel and hit the notification bell so you don't miss any of that. If you're watching this all the way through to the end, let's go ahead and hit the like button on the way out. I miss you guys already. If you're going to be on the screens between now and the next time I see you, I wish you a very happy trading. Watch your risk, and I'll see you guys in the next video.